Welcome to Invest. We'll talk about investing, finance, and professional development. So, court time of exactly 1 p.m. on the Eastern Time on the 8th day of 2023. Hope you guys have a great weekend and also happy Sunday. Ethereum $100,263. That up about 0.01% so far. On the overall crypto market, I would say as of this Sunday afternoon on the East Coast or morning on the West Coast so far, across the board we have been relatively flat and muted, not really moving up or down. With respect to Ethereum, we've been just sticking around the 1250 mark as a very substantive consolidated level that we have. If you look into the historical spectrum, collectively, we've been sticking around this level every single time we have a surge or a sell-off coming down. In the nearest interval terms, we've been durating for basically about 3 months straight up, and then subsequent to that, we have also durated for about a month and a half, and then on a historical level, we have also durated for about 6 months. So collectively, the 1250 mark is a strong durated substantive support level that we've been, magnetically glued to this level. So it's a critical support or resistance level that will take a seismic pressure for us to crack down, right? Which, as we've seen black swan events that happen, with respect to FTX or with respect to some sort of a crypto regulatory news that perks up, that whenever we hear that combined with some sort of a surprise element in play, will drive and break or plunge above the resistance level. Okay. So before we dive into technical, let's just take a look at the news front. Today is Sunday, so it wasn't, like we are expecting anything too specific. But across the spectrum, as we can understand that based on what we've seen on the Friday, obviously job report came out from ATP, that it was a positive report. But also because of the fact that we in the first couple of days of this new year, fund managers are also incentivized to be starting to buy in a little bit, right? And was it really mainly due to anything specific? No, it's just because of, they have to start deploying as a way of just starting the books for the year. So we are seeing some sort of a mixed bag of news, and obviously the activity reflects on initialization from the corporate investor side. Subsequently, the retail investors also gain confidence because the number speaks for itself that it eventually elevates on a rally, as the first one for 2023. But in terms of like the tactical nature of it, we know that that's, nothing is confirmatory. This was just probably another bear market rally, as we're still in the middle of it. The tactical next step that we need to really understand for us to really get more confidence around this rally for 2023 would be coming from the CPI FOMC meeting that will be happening on the last day of January and the first day of February. So the 31st of January and February 1st will be the FOMC meeting. And what we're going to be seeing again, right, if you've been following our channel for the last 5 videos so far, is that we need to understand like what's the outlook going forward? How are we doing with the rate hikes that we've been having so far? We've done 75 basis point rate hike for the last 4 times. We've done 50 basis point as one time in the recent one. Are we going to go with another 50 basis point, or are we going to be going with something more aggressive or more digressive? So we don't really know, right? So as we get that confidence, we will see how the corporate side, companies around the world will be following through, right? We have already seen foreshadows from tech companies specifically because they've been getting killed or worse, that they've been laying off people or shrinking down their capital expenditure, which is another word for real estate or more of a long-term liabilities that they have to hold, and obviously human capital, which is another big chunk of the expenditure. These 2 line items typically get killed first, right? So We'll see how that will play out. But also, Q1 is typically not the most rosy earnings from the corporate side, combined with the Chinese specific factor on Chinese New Year that's going to be happening in February. We don't expect much because February is basically half off among the Chinese New Year or Lunar New Year. So people are not really working or operating. So supply chain might be another issue that can percolate and exponentially be more emphasized, as we durate this firstly political war that we're still in, but also trade tension that we're also having, right? And then another news not really news, but like just like any repercussion around the FTX debacle that we've seen so far, and further scam that we might potentially get surprised as well, right? So a lot of news are that are kind of up in the air so far, so nothing confirmatory. So I would say the bullish rally that we've seen was not sustainable. And the last but not least, with respect to as you can understand that Q1 is tax season, so how are people managing their portfolio going forward, right? And then maybe before we dive into it, let's take a look at what ARK Invest and BlackRock has done recently. And you could see this very clearly. That ARK Invest on the day before closing was relatively a mixed day, nothing really specific. And then on the BlackRock side, it's definitely more of a heavier sell day than a buy day. So, it is what they are focusing on. So it seems like that was one of the reasons why they, we had some volatility early on, but across the spectrum, obviously we ended on a positive note, right? So let's just dive into technical respect to recording time of 1:06 p.m. on the Eastern time. We are at, again, 1263. We have literally moved like a couple cents since the open at 1263. So we're still at 1263. So nothing has really moved so far. It seems like we are trying to get above to the next level. We really need to plunge above to be the next line for us to sustain to a new level. Right now, this doesn't seem to be a relatively bullish signal. We just elongating, try to get above. What we need to technically to form newer higher highs is to plunge through, come up to the next level of the 1375, and for that we will allow us to get above to like somewhere around 1450. So 1450, and then come back down to a lower level to form a new escalator step. Right now, we're still in the mid of it. We're still in between, right? It seems very much like we're forming this like upward wedge as well, right? Which doesn't look good to us. We don't like upward wedge, because upward wedge means that we have to sell off from here. So, and also on the fact that the apex is already slowly being formed, and we've been clearly getting rejected on top on the daily as well. So 1263 doesn't seem like to be a sustainable level, so I wouldn't suggest buying around this level. And then on the weekly is also supporting, right? We are clearly extended for quite some time. We've been getting rejected every single time we reach about 48 out of 70. 1, 2, 3, 4, 5, 6, 7 times. Despite the monthly, it is looking quite nicely, right? We are looking to kind of glide eventually, but this is going to be more of a Q2 thing, not a near-term thing, okay? And then Bitcoin is doing something similar, right? Glide on a monthly. Weekly is extended, and then daily it is looking not the best either, right? You can see that we're forming the apex. Seems like we're forming an upward wedge as well, getting rejected on top as we reaching to a higher level of 53. So I don't really quite like this. Seems bearish at the moment. And then with respect to the SPY front, let's take a look at what's going on. It seems like monthly is gliding. It seems like we're getting resisted at the 43 out of 70 on the level. Weekly, it is looking like a death cross about to be formed. So this is definitely not sustainable. Weekly is bearish. Daily, it is indicating more of a bullish trend because of this golden cross that we're forming. But again, relatively preliminary. This is very premature. We are on the opposite side of the spectrum, so a near-term pump is not going to be a surprise, and I think it is happening as we speak. I wouldn't be surprised if Monday is going to be green again, because we do have some sort of elongation, right? Today's the 8th. The next major macro catalyst is going to be happening around the last days of January. So technically we have like a couple weeks of potential buying pressure if nothing exogenous or black swan related will happen. So those are the marching orders. Okay, so daily looks bullish, but weekly it is indicating this might not be sustainable. Even if it is, it will be questionable, because ultimately what we need to really form is a reverse head and shoulder to sustain this. So this is a shoulder, this is the head, this is the secondary shoulder. So we need to come down to a much lower level, like 367. And I think as we approach closer and closer to the FOMC meeting, as we approach closer and closer to the corporate earnings results, and obviously the tax season, there might be some liquidation events that might be happening. So definitely be aware. Okay, so that's it really for today. Let me know if you have any specific questions, and thank you so much for watching the tutorial on my Patreon yesterday. It's something I do every single day, and it works out for me. It's a relatively boring methodology, but if you do this repeatedly, sustaining profitability is definitely very doable. And investing is not the funnest game. I mean, gambling is a fun game, but that's not what we're trying to do here. We try to do fundamental technical analysis. It's all about just proper risk management. Okay, so appreciate you. Have a good day, and I'll check you on the next one. Take care. Bye.